ladies and gentlemen, let's talk about the aim of our institution. You know, the aim of the institution of the public-private partnerships in Hong Kong is to promote the sharing of the technical solution, legal solution, and finance solution of the PPP infrastructure units. Infrastructure investment is very capital intensive. According to Oxford Economics, they have carried out a global infrastructure outlook in the year 2017. They estimate the global infrastructure investment needs to be about 94 trillion between the year 2016 and the year 2040. On average, it's about 3.7 trillion per year. It's a lot. So tonight, we're very delighted to have Mr. Beng Neoh here to give us a talk on financing of the PPP projects. Mr. Beng Neoh has been in the financial services in this industry for more than 2 decades across Asia Pacific in both public and private markets. Ben has made a number of accomplishments in the region, including strategic partnerships and joint ventures with China Central SOE in the investment management and pension. Secondly, it also established funds management business in Japan and Asia with a focus on the long-term investment in the alternatives. Ben has also held the board of directorship in investment and pension organizations in China, Japan, and Australia. Ben is now currently in Singapore. He's the managing director of Challenger Funds Management and founding member of Transformer Parity, a not-for-profit organization working with leaders in the region to deliver the new paradigm of knowledge and practices. Prior to this, Ben was a managing director in North Asia based in Beijing for AMP Capital. And he is also an outstanding alumnus of Oxford Advanced Management and Leadership Program. In recognition of success in path-breaking strategy and practices in promoting cross-border business and industry collaborations in developed and emerging markets, and contributing to the ongoing reforms in the pension sector in China. This webinar is very honored to be sponsored by China Road and Bridge Corporation Limited. It's a wholly owned subsidiary of China Road and Bridge Corporation in Beijing, which is a leading construction company in the infrastructure industry in the People's Republic of China. CRBC started its business activities in Hong Kong in 1988. After spending nearly 30 years, CRBC has diversified from its construction business into other businesses such as trading, real estate development, property leasing, and infrastructure investment. Okay, without further ado, I now pass the microphone and screen to Beng Neoh. Thank you, Ben.
Thank you, Walter, for the kind introduction. And firstly, thank you to IPPP for the opportunity to be here and share with everyone some of the insights in terms of financing of PPP projects. So this evening, I'm going to go through in some details from the lenses of the capital asset owners and the private market in terms of the intermediaries. So we're going to spend time to go through some of that, and we got a section, some time for Q&A after the after the talk. So I'll start with looking at the number of steps there, and as Walter alluded to earlier, I mean, this is infrastructure investment is growing, huge momentum, and it is going to involve trillions of dollars across the board, and this is something that's going to be happening across the globe, both in the developed markets as well as in the emerging markets as well. Okay, and developed markets, there's still a lot of infrastructure that needs to be renewed, to be upgraded. As basic as the latest 5G technology, and including some of the high-tech stuff like high-speed rail, which in many respects, places in Asia like China is already way ahead in the world in terms of those infrastructure. Hence, the developed markets also need to have a, in some sectors, there's still quite a considerable catch up to do. In addition to that, you have the new economic, new industry sectors, especially like renewable energy, and these sectors again attracting a lot of attention and a lot of private capital going in. So for today, we're going to go through in terms of from a private capital perspective, what is the attraction for private capital to come in, and I think one of the key things is to highlight is that there's abundance of private capital out there, but traditionally assets that PPP involve tend to be more of public goods, right? So I think for people who have attended Professor Lalit's session a few months ago, in terms of getting community support for PPP projects, I think that's critical, and that is really about balancing, the social aspects and as well as the commercial bit, so that one can create a win-win outcome from those partnerships. Perhaps I start with looking at the structure of how typically a PPP assets involved in terms of starting from the government, which is ultimately the owner of those assets, and how the incorporation of those ownership entity allow for private participation. So the advantage of a PPP project is such that there is a mechanism that will allow that partnership between the public and private sectors, where with the right formula and the right mechanism between the short-term and the long-term stakeholders, one could enjoy an optimal outcome that would satisfy the requirements from both sides. And that is essentially the alignment and spreading and sharing of the risk of those projects. It can get very complicated as one get into in terms of the equity and the debt sort of a split. But we won't go into that complexity this evening. Again, motivations for private capital. Why would they want to come in and be locked in? Because remember, as I mentioned in the earlier slide there, it's essentially a long-term proposition for many of the investors to come into the infrastructure projects. So for those investors, long-term means that you have very limited, if in many projects, none whatsoever in terms of liquidity of be able to tap into your capital that you invest in the short term. So some of those PPP projects could be up to like 30 years. And so there needs to be a very long-term commitment from the investors to come in and engage in those activities. So motivations is fundamental, and it's important to understand why, from a fund manager's perspective, why would they go about, trying to arrange those deals to happen, bringing the parties together, and it's about how they get incentivized. And that incentives, whilst it needs to be there, otherwise people are not going to do it. But I guess at the end of the day, it needs to be fair. It needs to be also achieve the objectives of what each of these projects are out there for. Okay, and then the asset owners as well, in terms of how those attributes can be incorporated in there. And one thing which I want to highlight, increasingly more and more important, which we'll touch on a bit more as well in later slides, is the whole ESG component, which in the past is sort of like mentioned, is sort of like part of a ESG statement, but now ESG is becoming more of a necessity, and is, many of those projects have to come out with real action plan and real impact studies of ESG perspective. Attracting low private capital. Remember, this is private capital, so which means that the investor can come from anywhere in the world, right? And so they're not like public sector, where the public sector effectively, you got the government, they can legislate stuff, right? They can protect it in terms of what the government owns. But from a private capital perspective, especially when you're cross-border, you need certain protection, right? And so governance and compliance becomes critical. Otherwise, you could have you could have a wonderful investment, projects with a fantastic investment return profile. But if your asset's not protected in terms of the right of you claiming the assets because you're investing in it, if that is not protected, or there's no a transparent way of protecting it, then it becomes very challenging, and oftentimes people would shy away from investing. Okay. The key attractions of PPP, and this is where, I guess, from a project perspective, if you're going to put out there and try to attract private capital, you need to look at, well, what are you offering, right? And what you're offering needs to connect with what private capital and investors are looking for, right? Infrastructure, PPP type of product investments is particularly attractive, given that it is actually quite a natural hedge against inflation. Okay, it's long term, it's got stable, consistent, cash flow, and so from a risk return perspective, it is actually very attractive. Okay, and it provides significant diversification benefits from a portfolio sort of construction perspective. Hence, with the right governance and with the right arrangement in terms of the mechanism and protection of those assets, infrastructure PPP projects can be very attractive for long-term investors. Again, to get onto the sort of the short list of those investment projects, this is just to highlight the sort of a typical process that investment managers, investment banks go through when they evaluate those projects and look for and try to shortlist it. So the key thing is really to make it into the shortlist, which essentially is the screening and the initial DD work that needs to be conducted on those projects. And screening involves quite a extensive process, right? And again, come back to the governance and risk perspective in terms of from a regulatory framework, which jurisdiction in terms of the legal system that's going to protect the assets, the investments, for example, or sort of preemptive rights to make sure that the long-term investment is protected from any other sort of new developments that could have an impact on the cash flow and the income flow of that asset. And then both the operational and the financial perspective as well, which will be critical in coming together for the initial due diligence activities. So both financial and non-financial. Risk from an investment perspective, if one were to look at it from a very sort of simplistic way, risk is about the unknown, right? The uncertainties, the unpredictable stuff. Hence, for a project, as much as possible, things that can be more stabilized and control, then it allows, from an investor perspective, greater comfort. Okay. Importantly, and increasingly, ESG risks become more and more critical. Come back to my first point, which is the Professor Lalit's conversation about community support and the social impact. ESG risk is now becoming more real because especially governments are getting a lot more aware of the need to ensure the community buy-in and the stakeholders' alignment in terms of the interests. So these are substantial number of risks that one would assess in looking at the feasibility and the viability of an investment into a PPP projects. I mentioned about alignment a few times, and this is where I think alignment is where, from an investment perspective, it's about how you bring the two together, right? From the investor's perspective, as well as from an asset owners and the operators. One needs to look at from a financial perspective from an investor's, but also there's an investor interest to make sure that, from a disclosure perspective and the performance standards that PPP projects that need to be delivered. For example, if it's social infrastructure like health, especially in schooling as well, that's also an asset class, a sector that gets into a PPP type of projects, investments. Certain standards need to be met. So on one hand, you sort of like allow private operators to come in, private capital to come in, but the delivery of the services is going to have a direct impact on the community, and hence there's a need to have an ongoing monitoring of how much get delivered so that the service standard does not get compromised for the sake of profit maximization. Okay. Hence, in evaluating, and this is now flipping back to the from the government and asset owner perspective, which is then to say, well, what sort of private capital you want to be invited in there, right? And what sort of partnership with the right operators is going to be able to make sure that the right performance standards are going to be met, and that the level of service that's going to be delivered to the community is not going to be compromised. Hence, selecting a private partners with the right credentials and the right track record is critical, and that a transparent process in going through that selection also is critical to ensure the success. Having selected the sort of investors coming in, one needs to look at from a deploying perspective, how one's going to deploy the investment and the partnership in an operational way that's going to create that win-win scenario for all the participants and the stakeholders. And this is about the ongoing part of it, because a good, effective private capital owner and the fund manager who facilitates and help to pull that together will have an ongoing concern. So it's not just about investing and then full stop. You also have to get involved and engaged in the operation of the, not in terms of, get into the day-to-day running, but there needs to be a monitoring role so that it gives the satisfaction to both parties in terms of the owner as well as the private capital provider, some comfort that what's in the investment plan is going ahead in accordance to what has been agreed, and particularly in the profit sharing mechanism. And this is where it is important to have the right process to ensure that all parties have that visibility of how, when the activity is conducted, when the toll starts to be collected, right, that there's no leakage, and there is the mechanism that has been agreed on how you're going to share that will get implemented effectively. And so the ongoing KPI monitoring and all that is critical. Now, having said that, one must also look at from an evolving perspective from an ESG impact, because there needs to be a considerable trust that's going to be built, and to be able to sort of connect with the user, the consumer perspective. Now, one of the key things which is evolving in the past, especially in the past 18 months or so, with the global pandemic, is that we start to see huge divide and great inequality that is happening in certain sectors that have previously been whether you call it privatized or been gone through the PPP type of arrangement, especially in health, education, and transportation. Hence, there's actually quite an urgent need to look at in terms of how those projects, especially those going forward, can be arranged such that it could drive those global collaboration between the public and the private sector. And this is about how connecting both the public and private, because the reality is that in many markets, private capital is becoming a very, very dominant part. And we know for many of those projects, especially infrastructure, as Walter mentioned earlier, it's capital intensive, it's long duration in terms of its timing, and so you need a long-term commitment, and you need to have a good, robust model of working together with private capital to have that partnership to drive many of those projects, because they get it right can deliver a tremendous benefits, social benefits, and the public goods. So that requires leadership from government to engage. It requires private capital to be connected and aligned, so that whilst there's the element of investment return and profit maximization, but it's done in a fair way that would ensure that the right level of service the right level of access and affordability is can still be achieved. Great work from think tanks like IPPP in providing those professional technical expertise, new knowledge, and connecting people and getting those connectivity happening to make those projects successful. And importantly, policymakers need to get onto the same table with those stakeholders, and it's not about just coming up with policy framework and creating regulations, but really putting into action of translating those key policy statements into specific projects, into specific activities, investment activities that would generate real outcome. A key to the whole thing is really about the fairness in that arrangement between the profit for the all the stakeholders, and ensuring that the distribution of it that would then and with that, it is an exciting opportunity to look at how we can create a constructive pathway for the efficient allocation of private capital into PPP projects that can create quite substantial social impact. I'll finish the last slide with just bringing it all together. That is, as Walter mentioned, infrastructure investments, activities, it's going to be a huge drive for economic growth globally going forward. It is a huge investment opportunity for especially from a private perspective. There is a need for those infrastructure investment to occur, and those PPP projects to come together. But it's fundamentally important that this arrangement is done such that the alignment of interest is there, and that it can create substantial social impact from mobilizing those private capital. I shall end with that and open for questions. Thank you.
Thank you. Thank you. Thank you very much, Ben. So now it's question and answer time. If you have any question, either you can put in the Q&A or chat, whatever. You can chat with our speaker. Any questions? If not, I have the first question for you, Ben. Okay, you mentioned fair profit and benefits distribution. This is a very important term. We're talking about fair profit distribution. So we're talking about a constructive path towards equity is through the efficient allocation of private capital for social impact. But investors like to invest in stable and predictable environment. For example, many investors prefer to invest in Australia to Thailand. How can we encourage investors to invest in the emerging markets in these developing countries? Can tell us something about encouragement?
Yeah. Well, as we know, private wealth is growing in phenomenal rate. Okay. And be able to access those private capital, I believe, is important to ensure that there's enough financing, there's enough funding to help with the many infrastructure projects that need to take place, right? But we all know that private capital, has an objective, right? The owners want decent investment return, okay? So how do you attract them, right? And so you got to be able to make sure that their interest is looked after. Otherwise, they're not interested, okay? But to do that, as you rightly pointed out, for long-term infrastructure projects, there could be a number of risks involved, right? In terms of the cash flow and some of the ups and downs of the economic cycle. But this is where it makes PPP quite unique, because it is a public and private partnership, which means that government, from a public perspective, does not just do nothing, right? So there will be a certain element in a PPP project's investment that government needs to provide certain, not so much of guarantee, but at least some protection for some of the big risk that could happen in terms of try to smooth the income stream of the projects. And this is where I think, from an emerging markets perspective, many emerging market PPP can pick up a few points from some of the success in the more established, matured market, and look at what sort of works for those markets, and be able to address many of these risks, which one could say that many of actually are perceived risks, right? It's because of familiarity, because until recently, a lot of the private capital are from developed countries, developed markets. So their familiarity with the emerging market is not very deep. Okay, so a bit of education and a bit of more active, and that's why I come down to my earlier point, which is that policymakers need to start thinking about the tremendous value they can add to put those policy framework into actions. And I think some of the reforms that's happening in China clearly demonstrate how government has played a very effective role in making long-term infrastructure projects, which comes with many risks in terms of how do you create the demand for it down the track. But in order to get the right policy framework to work hand in hand with how the implementation of those projects. So that certainly can make a big impact on in terms of the risk consideration, and hence from a risk consideration, it then helps to address the pricing issue, because the higher the risk, people were only willing to pay lower price, right? Because then they demand higher yield, right? Yeah. And at the moment, global yield is at historical low, right? Especially among the OECD countries. So there's a lot of wealth out there, a lot of private capital that need to find home that can generate yield that are at least in a high single digit. So in the old days, people will come to emerging market, and if you don't have anything above 20%, they're not interested, right? But because the yield in developed markets is getting so hard to get now, in most OECD countries, you'll be lucky to get anywhere close to 5%, right? for those mature assets. Hence, a high single digit or a low double digit investment proposition, will start to get some traction. And if you do that with the government involvement to help to promote and to get greater understanding that a lot of the risks are not as big as what people think, then you could push the price up a bit, and hence, the premium will be the risk premium attached to the emerging market assets, especially in PPP, where there's a strong government backing, could be very well, priced.
Thank you very much. In fact, you're talking about emerging market. Possibly now it's getting better. Now U.S. said they will have the Build Back Better World scheme. Try to compare or compete with the BRI, okay, from China. So I hope in the initiative, more money can go into emerging markets.
But they are not as kind as China.
Okay, now I got one participant called Bernard.
Yeah.
Bernard Shum here. His question is: ESG risk are mentioned in your speech. Can you please elaborate a bit for him?
Yeah. So ESG is quite wide-ranging. Yeah. One that is of immediate attention is certainly on the whole issue of environment, and one needs to look at from an ESG in the same way, in the sense that you got to balance between the environment and the social, right? I mean, I talked about the social impact, and so from an ESG perspective, many of the from a private capital perspective, many of the big pension funds around the world, which are one of the biggest groups of private capital that go into a long-term investment projects in PPP, there is a strong movement to say that what we invest in must not make an adverse impact and damage the environment. Okay, so for example, if you're going to have a PPP projects into power plant, right? In this age, one would probably steer away from the old technology, right? And one would then move towards more of the renewable energy. Okay, but it's not only on those new projects, but it's also on some of the ongoing projects, because many of the existing infrastructure can be improved, can be enhanced, so that they are more environmental friendly, right? And so that includes, some of those super highways, toll roads, in terms of putting measures in place to improve its environment impact. So that's critical. The other equally important is, and you could argue a bit more important, is the whole social aspect, because many of the PPP projects are necessary because they're there to meet certain social needs, right? So the social impact needs to be measured. So again, it comes back to my earlier point about the fair profit, which is what a lot of the private capital are looking for, but the benefits. There needs to be a fair distribution, so that the fundamental reason why you need those PPP projects in the first place, at the very least, can be met, which is creating that social impact. And these days, it's no longer just say, again, as is I touched on earlier, it's no longer just coming out with a nice ESG, sort of statement, but one needs to actually demonstrate from a quantifiable, tangible way of how you're not causing a damage or adverse impact, but increasingly, you need to demonstrate how you improve, how you enhance, how you actually generate the contribution towards the environment, contributions, importantly, towards the social benefits.
Thank you, Ben.
Thank you.
And now I got another participant. I see there's a button here called Answer Live. I don't know whether he can talk on this question, or can you see it, or I read for you. This is
yes, I can see now.
You can see now. So could you please answer Professor Chen?
Yes, Professor Chen. Social or people elements in the PPP. Any chance you can share with us projects that really factored these in your PPP packaging? Well, this is Professor Chen. From a social aspect, this is where increasingly, especially when you talk about social infrastructure projects, yeah. So, for example, schools, right, can be, and traditionally, if you think about in poor area, the schools can be very poorly maintained, yeah, can be very deprived of some of the modern technology, which has an impact and impede the learning. Okay, so if you have a PPP projects where you invite private capital to come in and be part of that, one could actually put in the PPP agreement that how the government will pay certain coupon or interest and income for the private operators and the private capital investments, but in return there must be certain standards that need to be maintained so that the right equipment, the right maintenance is procured and maintained in the schools, and it create an environment where students in those disadvantaged area can have better access than what they used to have. So whilst you can't make that happen overnight, but making sure that the children in that area have access to those technology, to have access to the right facilities, and that can even include proper sport facilities, right? So they have proper field to play in, they have a proper gymnasium to exercise, to help with their growth. So that could be enshrined in the PPP agreement, so that the operation of the projects and the KPI, that the key performance indicator that the operators must maintain will be monitored. So the enforcement is critical to ensure that the delivery of that service standards. So I hope that helps to.
It's good. It's good. Okay. Any more questions from the floor? Oh yeah, there's one more. Okay, let's push on. I let you answer live. Okay. This is another professor from.
Oh yes.
You know him?
I don't think we have met, Professor.
He's from Sri Lanka.
Ah yes. So the question is, in Sri Lanka, there is the recently launched China-backed port city project. What is your opinion on the success of applying PPP in an emerging market like Sri Lanka? Professor Pujitha, thank you for that question. Now, I must say I'm not an expert in Sri Lanka, although Ceylon tea is one of my favorites. I grew up in Malaysia, and our most of the tea that we have in Malaysia come from Sri Lanka. As far as applying PPP in emerging market, whilst the success is probably, the track record is relatively short. Yeah. And why is relatively short? Because until recently, when you have China who has come out with, like the Belt Road Initiative, right? Not many countries, unfortunately, in the past have been so engaging in coming with real money, real capital to help to build real infrastructure. I mean, I remember I grew up in Malaysia and we were developing countries, we still are, right? You used to have foreign aid, right? That didn't translate to massive infrastructure projects, right? Whereas what we're seeing today, and it's not just happening in Sri Lanka, the most impressive stuff is all the exciting stuff that's happening in Africa, right? That we are seeing capital being deployed in emerging markets, and especially in PPP, which I think is a tremendous initiative, because PPP of infrastructure projects, again, those projects help to build the accessibility and affordability for people. So when you have those infrastructure projects up and running, commercial activities can be conducted. And this is what drives economic growth, right? You got to have the right ports facilities. Otherwise, all the produce are going to get stuck at the port. You're going to have the right airport, good infrastructure in the airport, so that you can have good logistics happening, so that goods and services commerce can occur. Without commerce, there's no economic activity, right? Because people ain't gonna produce more if they can't sell more, right? Because and then you got to connect to the market. And so I think my opinion is that PPP projects is fundamental for economic development, okay? And to be able to connect capital, not just private, but cross-border, it's exciting. I think this is one of the sort of great benefit of globalization, that we are getting a lot closer. We are getting more familiar with different markets, and importantly, we're willing to invest. And if that investment translates into good, positive PPP projects that can deliver positive social impact to help people to improve their lives through commercial activities, so that people can go out there and work and produce and generate more exports and earn income, and from there create wealth. And this is so I think the success again comes back to my earlier point during the presentation, that there needs to be a very constructive dialogue and engagement going, so that the arrangement is not one-sided. It is a good alignment of interests. The capital owners get what they wanted in terms of their investment return, but not too much. Right? It needs to reflect the risk that they are taking, and government can take that initiative.
Okay, that's very good. That's very good, Ben. Yeah. Oh, it's Professor Chan. Again, just thank you for Ben. Okay.
Thank you, Professor Chan.
Okay. Now I think I do not have more time for other people to talk. Although I see someone want to talk, I have to stop it because it's almost time. Okay.
Oh, okay.
So it has been an honor to have you, Ben, here tonight and be able to listen to you, the insight in the acquiring and deploying the private capital perspective. So it's also been a pleasure being with all of you, those behind the screen tonight, okay? Thank you very much. Last but not the least, we'd like to thank Charter Road and British Corporation for sponsoring this webinar. The Institution of Public-Private Partnerships will continue to arrange useful webinars to our members. So, and you are welcome to join our institution. I wish you all have a very good evening. Thank you, Ben. Thank you very much indeed.
Thank you, Walter, and thank you, everyone.